Good morning, everyone. Welcome to today's conference call. We have with us Chief Executive Officer Devan Sharaf, Chief Financial Officer Jayan Kumar, and Financial Analyst Niharika. This session will cover our financial performance for 24, our projection for 25 and 26, and our strategic initiative to drive sustainable growth. Let's begin with an overview from our CEO.
So, thank you. The last year has been dynamic, and despite some challenges, it has been remained resilient. In 2024, our total income stood at approx 38,000 million, and however, we anticipate a slight decline in our revenue. It is assumed to be declined 4.8% decline, bringing it to 36,000 million approx. This is a temporary phase, and we expect a rebound with a 5% growth in 2026, pushing our revenue to approx 38,000 million. Our strategic focus is on improving profitability, efficiency, while navigating evolving market conditions. We have been investing in technology and processes optimization to streamline operations, enhance customer satisfaction, and create long-term long-term value for our stakeholders. These efforts will help us mitigate short-term fluctuation and strengthen our market position. One of our key initiatives is digital transformation, which involves integration, AI-driven analytics, and optimization tools to enhance our decision making. We are also focusing on expanding into emerging markets where demand is growing, ensuring that our product portfolio remain competitive. Additionally, customer engagement and retention remain top priority, and we are launching targeted campaign to build strong relationship with our client. So that was my overview.
Uh, Thank you, Devansh. Now, Jayan, can you take us through the key financial metrics and how they evolved from 24 to 26?
Yeah, absolutely, Maksud. In 2024, we reported a profit after tax of 5,321 million, despite a slight dip in revenue in 2025. Cost optimization will drive PAT growth to uh, 5,442 million by 5,442 million by 2026. We expect PAT to rise significantly to 6,000 million approx, reflecting a 12% increase. This growth will be driven by our cost saving initiative, process efficiency, and disciplined financial management. Looking at cost structure, material cost as a percentage of sales are expected to decrease slightly from approx 52% in 2024 to 51% in 2025, thanks to renegotiated supplier contracts and optimized processes. Employee cost and administrative cost remain steady at 8% and 4% of sales, respectively, while while other operating expenses continue at 9% of sales. Our ability to maintain cost discipline while improving efficiency position as us well for sustainable profitability. Another key area is cash flow management. We are optimizing working capital by improving receivables, collection processes, and reducing inventory holding cost. We are also strengthening our supply chain resilience to ensure that external shocks do not disrupt our operations. Furthermore, we are assessing opportunities to refrain uh, sorry, not refrain, it was a refinance existing debt at more favorable rates, reducing interest cost and improving overall financial stability. Over to you, Maksud.
Thank you, Jen. Now, Niharika, given these financial trends, how do they impact our overall business outlook?
Okay. So the trends indicate that while we may experience the temporary revenue pressure, our focus on operational efficiencies will be the key driven of long-term profitability. Our ability to optimize the cost, streamline processes, and leverage the technology ensures that we maintain the strong financial health despite short-term fluctuations. The projected increase in the PAT from 24 to 26 highlights our strategic cost management and the sustainable growth initiatives. This upward trajectory uh, reflects not only our resilience in managing the expenses but also our ability to ensure the revenue stream through the innovation, market expansion, and the value driven offerings. Additionally, industry forecasts suggest the moderate growth opportunities, particularly in emerging segments and evolving customer preferences. Uh, we are committed to capitalizing on those opportunities through well-defined strategic initiatives, including the product diversification, project penetration, and the digital transformation. To maintain our competitive edge, we continuously access the market trends, regulatory developments, and macro economic shifts. Our agile approach allows us to swiftly adapt to the external changes, mitigate the risk, and position ourselves for the sustained success by reinforcing our operational strategies and aligning our strategies with the industry trends. We are confident in our ability to navigate the challenges while driving long-term shareholders' value.
Thank you, Niharika. Now, Jen, could you provide insight into our capital structure and financial leverage? How do you see it evolving?
Certainly, Maksud. Managing financial leverage is a key priority for us. In 2024, our bank loans as a percentage of equity stood at 10%, which we expect to reduce to 9% in 2025. Similarly, long-term borrowings as a percentage of equity will decline from 5% to 4%. This reduction in leverage will provide us with greater financial flexibility, enabling us to invest in strategic growth initiatives while maintaining a strong balance sheet. Moreover, we are actively working on optimizing working capital. Inventory turnover days are expected to decrease from approx 40 in 2024 to 38 in 2025, reflecting improved inventory management. Our days sales outstanding remains stable at 45 days, indicating consistent customer payment pattern. These improvements will contribute a strong liquidity position and allow us to sustain our growth plan without undue financial strains. We are also committed to maintaining a prudent capital allocation strategy, ensuring that we balance growth investment with shareholders' returns. Our strong cash flow position allows us to evaluate strategic acquisition that align with our long-term vision. Over to you, Maksud. I hope I answered that.
Okay, thank you so much, Jen. Now, Niharika, what are the some key assumptions underline our forecast for 25 and 26?
Okay, so a financial projection that are based on the several assumptions. So first one is the stable economic condition and the industry growth. So we anticipate the steady macroeconomic trends and moderate industry expansion, creating a favorable environment for our business. Second one is the cost control measures and process optimization. So ongoing efficiency, it improves, and disciplined expenses management will help to sustain the profitability. Third one is the expansion into growth markets. So our strategic focus includes the entering high potential marketers and broadening our product reach to drive the revenue growth. And the fourth one is effective risk management. We are actively mitigating the risk through our strong financial planning, scenarios analysis, and adaptive strategies. Additionally, we remain vigilant in monitoring our external risks such as inflation, supply chain disruptions, and market volatility. This ensures we stay agile and responsive to the changing conditions while maintaining the financial stability and long-term growth.
Thank you, Niharika. Now, Devansh, any final thoughts on our outlook and long-term strategy?
Yeah, we are confident that our strategic direction and our ability to drive sustainable growth, our focus remain on efficiency, evolution, and customer centricity. We are committed to maintaining transparency and open communication with our stakeholder as we navigate the evolving business landscape. We also recognize that talent development plays a crucial role in our success. We are investing in employees training program and leadership development to ensure that we have a right capability to execute our strategy effectively. Our ability to adapt to market changes and leverage new opportunity will be the key to achieving the long-term success.
Thank you so much, Devansh. Now, I would like to ask some questions. So, my first question is, how do you plan to maintain operational efficiency while expanding market reach?
So I would like to answer that we are adopting a dual approach by investing in optimization and streamlining internal processes while pursuing a strategic partnership to expand our market presence without significantly increasing cost. Hope you got the
Thank you,
answer.
Devansh.
Yeah.
Yeah. Now, can you elaborate on the impact of reduced debt on future investments?
So, Maksud, I would like to answer that. The answer goes like by reducing our debt burden, we can allocate more capital towards high growth investments. This ensures we have a flexibility to pursue strategic initiatives while maintaining our financial stability. I hope I answered that. Over to you, Maksud.
Yeah, thank you for your answer. Now my next question is, how does the industry's projected growth impact your business strategy?
Okay, so Maksud, I would like to answer that meaningful question. So, with the industry sales growth projected to increase from 6% to 7%, we see a strong opportunity to expand our market shares. This upward trend indicates the growing demand, which we aim to capitalize on growth strategic initiatives. Our focus on innovation, efficiency, and customer centric solution positions us well to gain a competitive edge. By enhancing our product offerings, optimizing the operations, and leveraging the market insights, we are confident in our ability to drive the sustainable growth and strengthen our industry presence.
So thank you everyone for your answers. It was a great session with you all.